As a concept, equity as an asset class is not the safest, as we all know, because it's got a lot of volatility and risk associated with it. But however, you can manage that risk and volatility through effective asset allocation. Because every single individual, depending on their age, their work profile, typically would want an X% of equity and an X% of debt. So I think it's very important to determine the right asset allocation mix between, say, debt, equity, real estate, whatever you have, depending on the circumstances and the situation. So overall, I think that's the biggest consideration when it comes to equity investment. I think equities at the end of the day will still give you the best return, over a long-term period of 5 to 10 years. Maybe 2 to 3 years sometimes becomes a short-term situation. But I would look at more from a 5 to 10 year perspective, because historically equities have generated about 14 to 15% CAGR. So I don't see any reason why equities should not give, maybe not the 15% kind of returns, but at least the 12 to 14% kind of returns over the next decade or so. So a lot of these situations and events will keep evolving. I mean, like we have said, we have undergone over the last 2 decades a lot of crises, right? It started with the global financial crisis. Then, of course, India went through a major economic shakedown. This is followed by the COVID pandemic, etc. But still, look at where the markets are. They are at all-time highs. So, along with risk comes volatility. So, equities as an asset class will have the volatility, and you should only take so much of equity that you can manage. The moment you start overextending equity beyond your capacity, things are going to become very difficult in managing. So I would think that these events, probably some of it probably is already in the price, because we have seen a decent correction, not only in the indices, but a lot of stocks have corrected, significantly from the top. So I would rather look at the stocks, the underlying fundamentals, rather than focusing too much on the markets. Before deciding as a portfolio manager, when I'm building my portfolio, the underlying stocks and their fundamentals and their prices and their valuations play a much more important role rather than, the overall markets itself. Like I mentioned, the correction has happened, and there were certain pockets where you saw, a lot of overvaluation. Seemingly, some of those stocks have actually corrected 30 to 40% also. So some bit of correction has already happened. But as long as, the fundamental growth is intact, the long-term story continues to remain intact, I don't see any major issues. But yes, I mean, if you're asking me a broad question in terms of, can the market probably remain sideways or go down? It possibly can, because there's lots happening in the world, and it's become a risk-off kind of scenario. But in my view, these are wonderful opportunities for people to invest in equities, because this correction has happened finally. Because we've seen last year was a significant year in terms of equity market returns. So now we are seeing a fair bit of pullback, and investors should definitely use this opportunity from at least a 5-year investment horizon, not 2 to 3 years. Thank you.